Welcome back to the Investor Professor podcast. This is Dr. Ryan Peckham, and this is episode 185. On today's episode, what else do we have to talk about except the difficult market that this has been as we look to the Iran war, the Iran conflict. The markets have now been down 5 weeks in a row. So we're going to discuss a couple different scenarios here on how to protect your portfolio and look for opportunities if there's any available. And we will just talk investment strategy around this war and how the potential impact of this could be over the next several months. So as always, get your mind right and let's get to work. Okay, well, welcome back to the show, everybody. Man, it's been a tough couple of weeks. It's been a tough year, 2026, 12 weeks into the year, and we have 3 positive weeks and 9 negative weeks for the S&P 500, including 5 negative weeks in a row. So now we have every index in the red. For the year, we have the Dow down 6%. We have the NASDAQ down 9.87%, so very close to a 10% drop. We have the S&P down 6.96%. When you look at some of the darling stocks over the last couple of years, the Mag 7, which is Microsoft, Meta, Tesla, Amazon, Google, NVIDIA, and Apple, those are just getting absolutely beat up this year. Microsoft is down 26% for the year. Meta's down 20%. You have Tesla down 19, Amazon down 13, Google down 12, NVIDIA down 10. Apple doing the best actually here, only down 8% for the year. So yay Apple. But just been a very tough environment. And, when we look at this, it's hard to sugarcoat anything, but basically say that a lot of this is going to be over the last 5 weeks is the Iran war and, what's going to end up happening with oil and gas. So we have oil going up, which is a supply shock because there's obviously the Strait of Hormuz in Iran has been blocked. No oil has been able to get out of there. That's 20% of the world's oil supply. And so when that's shut, there's just a lot of repercussions that happen from that. So, one of the things that I wanted to start with is, I named this episode, I Guess Bro, from the Jonah Hill meme that has gone around, all the years of just, when I hear politicians say, well, this war is not going to take very long. It's going to be 4 to 6 weeks. Well, that's not what, history shows. And so we look at some of the things that President Trump has done, which, I think it kind of lulls you into this overconfidence bias is the fact that, what we did last summer in Iran was a success. Then we take the Venezuela president out. That seems like a success. And it thinks, man, I think we're going to be able to do all of this stuff very quickly. But when you look back over time, especially when you look at wars in the Middle East, the quickest conflict we've ever had would have been Desert Storm, the Gulf War back in 1990, 1991, and that was still 7 months. That was 7 months, so we're 5 weeks in. So Gulf War, quickest one on record, 7 months. The Iraq War ran from 2003 to 2011, so that was 9 years. And then the Afghanistan War, we were there for 20 years. And so this 4 to 6 weeks number, I don't know. We're going to have to see something obviously pretty quick because otherwise things start to get pretty dicey for us. And when I say us, I mean like your portfolio, the stock market, things like that. So I think every index is now in correction territory. So if you remember, a correction is a 10% drop from their previous high. So this week we did that as well. But when you look at, when you have oil up to these levels, energy touches everything. And that's the one thing that you have to remember. So energy touches everything. So when we look at high oil prices, what does it impact? Well, number one, it's going to impact transports. So you look at the cost of shipping, you look at the cost of Amazon delivering your packages, Mercado Libre in Latin America, who, one of their big big competitive advantages is they offer free shipping for a lot of customers. And so transport's going up. You already see the United States Postal Service trying to add an 8% surcharge because the cost of fuel has gone up. And so that's going to be, think about summer vacations and booking airline tickets. And then you have cruises where I think the Carnival Cruise CEO has already said, man, we're not going to hit our profit target for the year because oil is up so much. So that's a big piece as well. You have consumer goods because plastics are oil based. So that means that, companies that are producing consumer goods that are plastic based, their cost is going to go up. You have industrial uses, which is chemicals and fertilizers, and all of those kind of things are going to go up. You have, there's just an increased cost. And so when you look at, so now the worry becomes higher oil prices, cost of goods going up. So all of a sudden we have inflation back on the table. And so you look and you see the Fed, we were hoping they were going to be able to lower rates. The prediction markets, if you will, they've started to take, interest rate cuts off the table. And some of them have even started putting rate hikes on the table later this year if this conflict continues to drag on. And so that's not a great sign, especially for people who are in real estate, where we were hoping that this was going to be the year that real estate got a little bit better. It's kind of the worst real estate market in about 40 years. And so all of these negatives are all coming together, and it makes it for a very tough environment, which is why you're seeing stocks do so poorly. Now, if you're in oil and gas stocks, obviously those have done well. But we have the VIX up, which means investors are nervous. And so you have to kind of think about, where's this going to go? So, man, this is the hard one. This is what I've been thinking about for like literally days and days and days, because you have some of these stocks that have gotten so beat up that if the war is short, man, this is one of those, man, I got to buy the dip type situations where you want to take advantage of some of these companies already down 20%, maybe 20 plus. And then, but if it's a prolonged oil shock and oil stays high, well, then you're going to have some multiple compression, and you're going to have the value of stocks probably continue to fall. So if oil keeps going up, other stocks are going to continue to fall. And then if there's an escalation, well, then all of a sudden, that becomes kind of no man's land for as far as asset prices are concerned, because we're getting to the point now where there are countries that are going to be in some pretty big trouble as far as not having, the liquefied natural gas or oil. They're going to go on rations, and it just starts to impair, the economies of the world the longer that this goes on. And so even U.S. companies like LNG is a perfect example. So Cheniere is a company, their symbol is LNG, which is what they produce. But their CEO was talking about like, hey, they're happy to send, ships, tankers over to Asia to provide them with natural gas. But here's the problem. When you take natural gas from the Gulf states, so of the U.S., so basically from the Gulf to Asian countries, it takes 28 days. So there's still this huge delay in when we ship it, where it goes, how long it takes, all of these. So some major cross currents here. And so that's the thing that I'm struggling with is like, all of a sudden, and this is what everybody's worried about. So in many episodes I've discussed, missing the best days in the market and, having to be on the dance floor, being in something, making sure you take advantage of this. But, when you have 5 weeks down in a row, obviously you're getting to the point where maybe you have, a bounce back week How long does it last? Who knows? I mean, the market is definitely oversold. There's a lot of companies that are oversold. But again, like that political risk of what's going to happen is going to supersede that, hey, I'm buying a good company. And so everybody, no matter what we think, no matter how long our time horizon is, it's not fun to invest in something today and feel really dumb 2 days later. And so it's like, well, yeah, I'd love to invest in some of these companies, but the price is getting better every single week. I mean, you look at Microsoft's a perfect example of that. I don't think anybody who's listening to this thinks that Microsoft is a bad company, is going to go bankrupt or anything like that. But, every single week, the deal on it, if you will, gets a little bit better. And so that is the hard part about managing a portfolio, managing all of these cross currents, is the fear of missing out, the fear of, I switch up my portfolio. All of a sudden, President Trump sends out something, says we have a deal, we're going to have peace or whatever, and then you're going to see the market rally like you did on Monday. And the fear of missing that is pretty, it's a good fear to have, because at some point it's probably something like that's going to happen. But you look here and you see that there's going to start to be a lot of pressure from other countries as they start to take real economic hits from not getting that oil and gas and having to ration, and as it starts to impact their economy. So that's Saudi Arabia, UAE, Qatar, like it's going to start to impact their economies. There's U.S. companies, there's ConocoPhillips, and there's, ExxonMobil, and even UK company, Shell, and I'm sure many others that have assets in those areas. And they're now worried that, they're benefiting from, higher oil and gas prices, but they're also worried that all the equipment and infrastructure and money that they've invested in those countries is now, basically in harm's way. So that counterbalances, yes, they benefit from higher oil, but if all their stuff gets bombed, that infrastructure is going to be much harder to put back in place. So, this is just one of those times where, man, you just, what do you do? Well, I mean, we've discussed it before, but if this is prolonged, then the prices that you're looking at are probably going to get better. And if if you think the war is not going to last that long, then it's probably a great opportunity to buy the dip. And you don't know which one of those it's going to be. I started the podcast telling you, how long different wars have lasted, because I do think it'll be longer than we expect. If they do put boots on the ground, that's not going to be a good sign. And so you have to be patient, but you also have to give yourself the ability that if you purchase something, you should start small, and you should really make sure that you have the opportunity to, hold whatever cash, or, you're going to have to commit to owning that for, probably an extended period of time. So this is definitely an investor's market, not a trader's market. And you're going to have to be cautious. And so there really is no quick, easy fix, but you just have to be aware of those risks and the fact that, there's probably not an easy solution to this one. So hopefully, like when you record these, I've said it before, it's like, man, I record this is Saturday, March 28th. And you're like, I could look like this episode could be completely wrong in 3 days. And quite honestly, I hope this one is. Like, I hope that like all of a sudden, this ends and, things turn back to normal and it would be good. But this will start to impact the AI trade as well, because it's not just, oil and gas being higher makes things cost more, which we've gone over, but also energy costs being higher. I mean, let's think 1 or 2 levels deep here, energy costs being higher. I mean, how much energy does it take to run an AI data center? Yeah, I mean, and we don't really know yet. I'm sure it's not cheap. We have the first ones coming online, supposed to be this summer. And so, that's going to be more demand on the energy grid when that happens. And so, so you look and what's interesting is that I was looking today, because you think we got this defense going on, and you're like, okay, well, I'm going to put my money in. We talked about defense, right? Well, go look at defense stocks over the last month. Yes, there was a huge surge in as far as the defense stocks going up right when the war was announced. But if you look at Lockheed Martin for the month of March has gone from $6.78 a share to $6.14. Raytheon has gone from $2.10 to $1.89. Northrop Grumman has gone from $7.67 down to $6.79. And gold has actually gone from $5,300 an ounce down to $4,500. So the safe havens, the place where you thought you'd be safe, even those aren't working out. So it just shows you how much confusion there is in the market as far as investors not knowing where to put their money. You see the dollar rallying, which makes gold is denominated in US dollars. So with the dollar being stronger, it makes gold even more expensive for other countries. And so really the only thing that's worked out is if you go look, the oil and gas stocks are at all-time highs. So Chevron, Exxon, Oxy, I don't think Oxy's at an all-time high, but Chevron and Exxon and a number of others have done well. So it just makes the environment very confusing. And, it's difficult if you chase, you have to be aware. It's like, man, if I chase oil and gas at these levels, and all of a sudden there's any talks of peace, well, then it's going to get reversed. And so you have to be very careful of that. You have to be very aware. And the other thing is you don't have to make any decisions. So if you look at your portfolio, and yes, it's gotten beat up. And believe me, when investors, clients, when they look at their March statement, it's going to look pretty rough. I mean, we're tracking for one of the worst months in the last 2 to 3 years, the performance in March. And we only have, 2 days left or two trading days left. And so it's going to be pretty rough when investors see their statements. But again, to kind of recap here is if oil keeps going up, other stocks are going to continue to lose. But it's not going to last forever. The market's oversold. A lot of stocks have been oversold. So part of, you wants to be contrarian to go kind of, look at some of these stocks that have been really beat up, but you just have to be careful because again, we're only 4 to 5 weeks into this. And remember, the Gulf War was one of the shortest wars we've ever had, real conflicts. And it lasted 7 months. And the problem with this today is that we're not really getting help from anybody. I think Trump is kind of, and I'm not trying to get political, but I think Trump kind of painted himself in a corner. He talked negative about all these allies for a year, and then now he's asking for their help, and they're like, new phone, who dis? They're not really wanting to help. And so, we're kind of out on a limb here and trying to figure out a way to kind of have an off-ramp of this that is beneficial. So it is beneficial for Iran not to have a nuclear weapon, but at what cost? How long does this last? What happens to the Strait of Hormuz? There's all these kind of things that are lingering out there, and the solution isn't great. But I do think long term, we're seeing just how important these small defense companies are. I know Lockheed Martin, Raytheon, Northrop Grumman, I know those are smart defense companies, but I think I said it in the last episode. We're using these, $3 million missiles against Iran's $35,000 drones. And you start looking in the U.S. and there's a lot of these small drone companies. I think that's what's going to be important later on when you look at kind of what we've learned from this conflict versus conflicts in the future. So not a whole lot of hard, fast rules in this episode. But again, there are opportunities out there, but you have to be very careful. Be very careful you're not catching falling knives. If you're investing out there in this environment, it has to be in things that you're willing to commit to, companies that you're willing to commit to, and companies that you're willing to add to if the environment gets worse. So, remember, you don't have to invest all of it at once. You can buy a couple shares. You can kind of do that, but just be prepared that if it lingers longer, the environment's going to get, worse before it gets better if this conflict lingers on. So not sure how helpful that is, but it is, these are not all the times in the market are great. And I was thinking, I've been this May, we will be our 5-year anniversary. And I was thinking, man, I've recorded on, a lot of market stuff. And then this time I was thinking, man, I actually haven't recorded during the time of us being, in a war. And so this just puts a lot of pressure on a lot of areas in the market where it supersedes. You can read annual reports. You can, look for companies. I mean, I get it. Like we talk about that all the time. We have companies they have great balance sheets. They have, all this stuff, blah, 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 blah. Like they have all the things going for them, but political risk and, conflicts like this, wars and things like that are these asymmetric risks that hang out there that we sometimes take for granted when we are in times of peace. And so it does put it puts a magnifying glass on these things. And so your portfolio just kind of gets taken for a ride when this happens. So better days ahead. 5 weeks in a row, you think like, okay, we should be getting to somewhat of a bottom here as far as, investors that have sold these stocks at some point, they will exhaust themselves. And the people that are true owners of these companies will be like, hey, I'm just going to hold this through. And at some point, when you want to see like, has a stock bottomed or not, we get some bad news and the stock stops going down. So, just kind of keep your wits about you. It won't last forever, hopefully. But we do need to have some kind of strategy. You need to have some kind of strategy of, do I like the stocks that I own? Am I happy with these companies? Do I think they're going to do okay? And then look to see what's on your buying list. Look and see, there's a lot of stocks this past week that hit 52-week lows. And so it's the lowest price since last April, since Liberation Day. How interesting. So, but for what that's worth, I hope this was helpful for you. As always, don't mistake activity for achievement. And on that line, you don't always have to have activity. Sometimes you just need to sit on your hands and wait for better days. So, thanks, everybody. This podcast contains general information that may not be suitable for everyone. The information contained here should not be construed as personalized investment advice. There is no guarantee that the views and opinions expressed in this podcast will come to pass. Investing in the stock market involves gains and losses and may not be suitable for all investors. Information presented here is subject to change without notice and should not be considered as a solicitation to buy or sell any security. Right R Equities does not offer legal or tax advice. Please consult the appropriate professional regarding your individual circumstances. Past performance is no guarantee of future results.